Welcome to the Rombuxland Podcast. I'm your host, and this is episode 16. Today, we're going to dive into the world of cryptocurrency and do a market analysis. We've seen some huge fluctuations in the crypto market over the past year, and we're going to break down what's happening and what it means for investors. First, let's talk about blockchain technology. Blockchain is the underlying technology behind most cryptocurrencies. It's a decentralized ledger that records transactions across a network of computers. This makes it impossible to counterfeit or alter transactions, which is one of the main reasons why people are drawn to cryptocurrency. The blockchain technology is secure, transparent, and allows for peer-to-peer transactions without the need for intermediaries. Now let's talk about some of the popular cryptocurrencies out there. Bitcoin is probably the most well-known cryptocurrency, and it's been the largest by market capitalization for a long time. But Ethereum is a close second, and it's actually the most widely used platform for decentralized applications. Ethereum has a wide range of use cases, from decentralized finance to gaming and entertainment. One of the main factors that's affecting the crypto market right now is regulation. Governments around the world are starting to take a closer look at cryptocurrency, and some are even implementing their own regulations. This can be both good and bad for investors. On the one hand, it can bring more stability to the market by providing a clear set of rules. On the other hand, it can stifle innovation and make it harder for new cryptocurrencies to emerge. Regulation can also lead to a decrease in the overall adoption of cryptocurrency, as some investors may be put off by the added complexity and uncertainty. Let's take a look at some real-life examples of regulation impacting the crypto market. In China, for example, the government has banned initial coin offerings, or ICOs, which are a way for new cryptocurrencies to raise funds. This has had a huge impact on the Chinese cryptocurrency market, and it's actually driven up demand for cryptocurrencies like Bitcoin and Ethereum. In the US, on the other hand, the government has been more relaxed about regulation. However, there are still some hurdles that cryptocurrency companies face. For example, the Securities and Exchange Commission, or SEC, has been cracking down on unregistered cryptocurrency exchanges and initial coin offerings. Another factor that's affecting the crypto market is institutional investment. Institutional investors are starting to take notice of cryptocurrency, and some are even investing in it. This can be a big deal because institutional investors have a lot of money to invest and can help drive up demand for cryptocurrencies. Institutional investors are also more likely to hold on to their investments for the long term, which can lead to a more stable market. Let's take a look at some real-life examples of institutional investment driving up demand for cryptocurrency. We saw this happen with Bitcoin back in 2020, when the investment firm MicroStrategy announced that it was investing $250 million in Bitcoin. This helped drive up the price of Bitcoin, and it was a big catalyst for the rest of the crypto market. Institutional investors aren't just limited to traditional investment firms either. They're also coming from unexpected places like pension funds and sovereign wealth funds. For example, the pension fund CalPERS has been investing in a cryptocurrency fund that's focused on Ethereum. Now let's talk about some potential risks associated with investing in cryptocurrency. One of the biggest risks is volatility. The value of cryptocurrencies can fluctuate wildly in a short amount of time, which can be scary for investors, especially if you're investing a lot of money. Another risk is security. There have been several high-profile cryptocurrency hacks over the years, which can result in huge losses for investors. It's essential to do your research and choose a reputable exchange or wallet to store your cryptocurrencies. Lastly, let's talk about some potential opportunities in the crypto market. One of the biggest opportunities is decentralized finance, or DeFi. DeFi is a new area of finance that's based on blockchain technology, and it's starting to gain traction. DeFi platforms allow users to lend and borrow cryptocurrencies in a decentralized way, which can be more efficient and cheaper than traditional financial systems. DeFi is also a great way for users to earn interest on their cryptocurrency holdings, which can be a great way to grow your wealth over time. Let's take a look at some real-life examples of DeFi platforms. One of the most popular DeFi platforms is Aave, which allows users to lend and borrow Ethereum-based tokens. Another example is Compound, which allows users to lend and borrow cryptocurrencies like Bitcoin and Ethereum. DeFi is a rapidly growing space, and we're likely to see a lot more innovation and adoption in the coming years. Now let's talk about a detailed case study of a cryptocurrency that's taken advantage of institutional investment. In 2020, the cryptocurrency Cardano announced that it had partnered with the investment firm Coinbase Ventures. This partnership allowed Cardano to raise $3 million in funding, which helped drive up the price of the cryptocurrency by over 50% in a matter of weeks. Here's a breakdown of the numbers. Cardano's price was around 0.02 at the start of the partnership, and it rose to around 0.03 within a month. This represents a gain of over 50% in just a short period of time. As we can see, institutional investment can have a significant impact on the price of a cryptocurrency. Another case study is the cryptocurrency Solana. In 2021, Solana announced that it had partnered with the investment firm FTX to create a new DeFi platform. This partnership allowed Solana to raise $100 million in funding, which helped drive up the price of the cryptocurrency by over 200% in a matter of months. Here's a breakdown of the numbers. Solana's price was around $1 at the start of the partnership, and it rose to around $3 within a few months. This represents a gain of over 200% in just a short period of time. As we can see, institutional investment can have a significant impact on the price of a cryptocurrency. Now, let's talk about a step-by-step implementation guide for investing in cryptocurrency. First, you'll need to do your research and choose a reputable exchange or wallet to store your cryptocurrencies. Next, you'll need to set up a trading account and fund it with fiat currency. From there, you can start trading cryptocurrencies on the exchange or using the wallet to store and transfer your cryptocurrencies. Here's a step-by-step guide to get you started. First, you'll need to download a cryptocurrency wallet, such as MetaMask or Trust Wallet. This will give you a secure way to store your cryptocurrencies. Next, you'll need to create a trading account on an exchange, such as Binance or Coinbase. This will give you access to a wide range of cryptocurrencies and trading pairs. Finally, you'll need to fund your trading account with fiat currency such as USD or EUR. Here are some expert quotes and industry insights to help you understand the crypto market better. According to the CEO of Coinbase, institutional investors are starting to take notice of cryptocurrency. We're seeing a big increase in demand for our products and services. According to the founder of Aave, DeFi is the future of finance, and we're just getting started. According to the CEO of Binance, we're seeing a lot of interest from institutional investors, and we're excited to see how this will impact the crypto market in the coming years. Now, let's talk about some future predictions and trends in the crypto market. One of the biggest trends is the rise of institutional investment. As more and more institutional investors enter the market, we're likely to see a big increase in demand for cryptocurrencies and a corresponding increase in price. Another trend is the rise of DeFi. As more and more people become comfortable with the idea of lending and borrowing cryptocurrencies in a decentralized way, we're likely to see a big increase in adoption and usage of DeFi platforms. Before we go, I want to ask you to share your thoughts on the crypto market. What do you think is driving the market right now, and where do you see it headed in the future? Leave a comment below and let's continue the conversation. That's it for today's episode of the Rombuxland Podcast. Thanks for tuning in, and we'll catch you in the next episode. If you're interested in learning more about how to invest in cryptocurrency, I recommend checking out our ebook. It's a comprehensive guide that covers everything from the basics of blockchain technology to advanced strategies for investing in cryptocurrency. We'll also be releasing a series of upcoming episodes that will cover topics such as cryptocurrency trading and DeFi. Make sure to follow us on social media to stay up to date with the latest news and trends in the crypto market. Thanks again for tuning in, and we'll catch you in the next episode. In the meantime, I want to leave you with a quote from the founder of Aave. "The future of finance is decentralized. We're just getting started." Stay tuned for more updates from the world of cryptocurrency and we'll see you in the next episode. If you're just starting out with investing in cryptocurrency, it's essential to do your research and choose a reputable exchange or wallet to store your cryptocurrencies. It's also a good idea to start with a small investment and gradually increase it as you gain more experience. Institutional investors are starting to take notice of cryptocurrency, and this can have a significant impact on the price of a cryptocurrency. As more and more institutional investors enter the market, we're likely to see a big increase in demand for cryptocurrencies and a corresponding increase in price. Decentralized finance, or DeFi, is a rapidly growing space, and we're likely to see a lot more innovation and adoption in the coming years. DeFi platforms allow users to lend and borrow cryptocurrencies in a decentralized way, which can be more efficient and cheaper than traditional financial systems. If you're interested in learning more about how to invest in cryptocurrency, I recommend checking out our ebook. It's a comprehensive guide that covers everything from the basics of blockchain technology to advanced strategies for investing in cryptocurrency. To wrap up, the crypto market is a rapidly changing space, and it's essential to stay up to date with the latest news and trends. By following reputable sources on social media, downloading a cryptocurrency news app, and setting up a newsletter subscription, you can stay informed and make informed investment decisions. Thanks again for tuning in, and we'll catch you in the next episode.